Guys, today we're going to be going over the Arnaud Legoux moving average. Now, you trade it very similar to other moving averages. The Arnaud Legoux moving average is actually a fairly new moving average. It came out just in the 2000s, so it really hasn't been around that long, and it was made in a way that also uses normal distribution, and it allows the regulating and smoothness of the high sensitivity of the moving average, but it also changes it to reduce the lag of information. But it still allows it to be smooth and reduce noise. So it stays a little bit closer to the price action than some other moving averages, and it's not as choppy as curvy. That's pretty much what it means. But you trade it kind of similar. So whenever your price action is below the line, that means you want to be trading down. And whenever your price action is above the line, that means you want to be trading up. Now, this is really good for high volatility traders that trade quite often. And a good thing to note is when you're using it is don't close out a position just because it crossed the line. That's not really what you want to do. You want to wait until the price action actually closes below the line. So if it crosses in the middle of a time frame, don't really worry about it. Don't be stressing it that much. It's like see right here on this candle, like you can see like it closes actually below the line, and that's actually the good signal to be like, okay, maybe it's time to get out. But you see right here, even though it went above the line, it didn't close above the line. It didn't close above the line until right here. And even then, it closed exactly at the line. And so it came and pressure pushed up a little bit, and then it still came back down. And it probably had a lot to do with the influence of that, of it closing so direct. And that just shows like how the buyers and the sellers were kind of confused of where they wanted to put the price in the first place. Like they were trying to figure out whether or not it was going up, it was going down. And then that's when you see this candle right here. You know, you got the Thor's hammer right here, which is another good indecision candle. Like, oh, what are we doing? What are we doing? Before this big breakdown candle. And then it follows below the moving average even further. And you could have scored a lot of pips right here. Like, every once in a while, with high volatility, I mean, not high volatility, but sideways markets, a little bit harder to trade. You know, you can see right here, like, it closes down. It's still down, but it's going up. Then it closes down, but it's not really doing anything. Then right here, you only get a couple pips up before you're closing right below it. So you can only score a couple pips during low volatility movements, but sometimes it helps get into the trend as it's going. It's really a good trend confirmation tool, and it does play a little bit close to the line, but it helps you get trades a little bit quicker. Like right here, you would have got this right here, this whole set until right here, and then you would have even got all this upwards movement, especially if you would have stuck through on this one, because this one looks like it closed. Yeah, it closed right at the line. Like when it closes right on the line, it's kind of like a 50-50, like maybe I should, maybe I shouldn't, and it's kind of just how you feel about the market at that time. But as soon as you saw this big high volatility candle right here, it would have been a good place to be like, okay, it's going back up, and boom, you would have been right back in the trade, getting pips, making money. So it's a really good indicator. It's like I said, it's very similar to other moving average indicators. You can like set up more than one and change the input for the window size. The window size is like the number of time frames back it goes for the moving average, and the offset has to do with the standard deviation of the normal Gauss distribution. And I can't exactly remember the sigma right now, but I think that's another movement backwards or forwards, and it helps control the lag factor. So you can make it lag a little bit more if you want to. But, you know, for most people, just the defaults work pretty well, and it works a lot better than a lot of other moving averages. So I think it's a really good tool to have in your toolbox, especially if you're a beginning trader. But if this helps you out, please give it a like and subscribe, and definitely check out some more of my videos. Y'all have a great day.